disability lawyer David Brannen, managing lawyer here at Resolute Legal Disability Lawyers. In this video, I'm going to answer the question, can the LTD insurance company deduct the CPP disability child's benefit? That is the question people want to know, and you're going to get an answer here in a second. Now, if you like this video, hit that like button. Don't forget to subscribe. And if it's not all clear, ask some questions in the comments down below. You are approved for long-term disability. You apply for CPP disability. You also get approved. The long-term disability insurance company, you accept that they're going to deduct the CPP disability from what you're getting. So your LTD payment will go down. But the LTD insurer is saying they also want to deduct those payments your children are getting. Now, if you have one or more children, they're each going to be getting around $250. Maybe the child doesn't even live with you. You're thinking, does this make any kind of sense? It sort of does. This has been litigated and fought over and decided by the courts. So the answer is yes. In certain circumstances, the long-term disability insurance company can deduct the children's payments, but it is not as simple as that. It has to be indicated in the policy that they can deduct the CPP disability child's benefit. Courts want them to be clear about that. So if it just says they can deduct CPP disability, that is often not enough. It needs to be clear that it has to say they can deduct. Usually what they say is, in the insurance policies, they can deduct CPP disability benefits received by other family members or something like that, because it covers a lot more things. But that will usually encompass the children's benefit. The other thing to keep in mind is that under most policies, long-term disability policies, they do not allow the insurance company to directly deduct the CPP child benefit. What that means is there are certain payments that you can get that are directly deducted from your long-term disability payment. For example, if you're getting long-term disability, $2,000 a month, and you get approved for CPP disability of, say, $900, then the $2,000 minus your CPP disability of $900 would leave you $1,100 a month that you would get from the long-term disability, and you get the other $900 from CPP. Other deductions that they can do like that are usually workers' compensation, any income you receive from employment. Those are called direct deductions. Now, those direct deductions need to be listed in the policy, so they're not always the same. And it's very rare that CPP disability, the child's portion, is listed there. So where the child's portion usually comes in is there are two formulas for how things get deducted. There's the direct offsets, and then there's this thing called the all sources maximum or indirect offset formula. This is getting a little complicated here, but just think of the big picture here, that there's different ways the insurance company can look at deducting income that you're getting. They're allowed to use whatever formula works out best for them. They will first look at they will run it through the indirect. Then they'll look at they'll run it through the direct, then the indirect. Whatever one gives the best or most offset for them, that's the one they're allowed to choose. What usually happens is the child benefit is usually allowed to be deducted in the indirect formula. Usually it's when you have two children or more. Sometimes having one children is not enough to make any change at all, but if you have two children, that's when it can really take effect here. Once you have two children and they're each getting $250, that is when this indirect formula can result in a lower payment to you or a greater deduction for the insurance using this indirect formula. And so that is when they can be deducting. I guess what you want to know from the big picture is that in certain circumstances, they absolutely can deduct the child's benefit. And there you go. Some insurance policies don't include it in there now. And certainly you have the option not to buy a policy with that in it. But if you're going through your work, you really don't choose what policy you get. It's going to be your employer who's choosing to have those clauses in there because it lowers the premium payments. So there you have it. We'll see you back here next time. I hope I've answered your question. Leave us your comments down below and take care.